So today I'm going to make a quick video on what FlexiCap funds are and whether it is a good investment to invest and when do you actually invest in FlexiCap funds. So let's check it out. So in the last 5 years, Nifty Mid Cap has given an average return of approximately 192% and Nifty Small Cap 250 Universe has given an approximate return of around 189% and Nifty itself has grown by around 98%. Now, when you look at this, right, you understand that it's very clear that large cap is okay, but mid cap and small cap is definitely overheated in today's market, even today, right? So if I take a new position in a mid cap fund or if I take a new position in a small cap fund, it might go into a downturn and I might not make returns because I might be investing at highs. So this is where investing in FlexiCap comes in. So when do you invest or why do you invest in FlexiCap? FlexiCap basically gives the fund managers the ability to invest in multiple different avenues and multiple different sources, so it's very flexible and you are not bound by any large cap, mid cap, small cap category, right? So you can pick any stocks, and another advantage of this is you can also pick stocks which are not in India. Now if small cap and mid cap funds are overheated, then I would invest in something like a FlexiCap fund. Now this is also good when even index investing doesn't make sense, because why? In FlexiCap there is a possibility that the fund manager, if he's really good, might beat the Nifty benchmark index also, and at the same time small cap and mid cap is overheated right now. So what do I do? So right now, even if you look at the market, Nifty is also at an all-time high, mid cap and small cap is also trending at a very high parameter right now. So that is the reason why anyone should invest in a FlexiCap fund. Now one very interesting thing that I do when I want to look at FlexiCap investing and I feel that I need to invest in any kind of FlexiCap is I look at Nifty if it's overheated or not. Now I don't look at the chart to find out if it's overheated. I go and look at the historical PE. So let me just show that to you. So as you can see, this is Nifty's PE ratio chart from the year 2000, and as you can see, in some zones it has been very undervalued during 2002 to 2006. This is immediately after the dot-com bubble that happened in 2000, and again you will see towards 2008 it got overheated to 24, 25, 26, 25, and then it went back down from 25 in 2008 Jan to almost 12, literally half in December 2008, right? And then slowly it started coming back up to normalcy. So as you see, market always goes in cycles. It is lower cycle, then it goes into an upward cycle, then again back into a lower cycle. Now in the last few years, obviously the market is very heated. In fact, during COVID, as you can see, the market was trading at very unrealistic valuations, and that is when you got the big jolt and everything fell down by almost 40-50%. Now even if you look at right now, the market is at 22.86 and 22.62. So I would say it is not too overvalued, it is not too undervalued, but it is definitely in the middle zone. Means if it goes up a little more and if the earnings don't support this, then definitely Nifty would go into an overheated territory, right? So if you look at investing in flexi funds, then this is a tentatively good zone to invest. If the market is somewhere around 13, 14, 15, I would just directly go into equities, because I know that you're going to get the PE rating advantage as well. So that is one of the two things that I usually do. Now coming to which are the two FlexiCap funds in the market. So number one is a fund which is a very old fund which is there from a very long period of time. It's called Parag Parikh FlexiCap Fund, right? Now they obviously have very good management that they have been doing for a long period of time, and they've really given a good result. So let me just show you that as well. You can just check this on moneycontrol.com. Always do direct, because if you do regular, you lose a lot of commission income as well. So you can see expense ratios at 0.58, slightly lower than category average, which is okay, and the fund size is 55,000 crores, right? Now there's a lot of people that say, Shashank, higher AUM is a problem because it's 55,000, it's very difficult for them to allocate money. It is true to some extent, but I would also say that someone like Parag Parikh and bigger funds, they know how to manage their money very effectively, so there is no issues there. Even if you look at the all-time returns, if I had to check, this fund has been beating the benchmark index, but it doesn't mean that if it's beat the benchmark index before, it will continue to beat the benchmark index later on. It also depends on the timing of your investment as well. Now if you want to look at their portfolio holdings, as you can see, they have companies like Microsoft, which is a foreign equity. They have local equity companies as well, and you can also check out their detailed portfolio, right? They have 2% in debt, 10% which is others, which is like an FD, and 87% is currently in equity holdings, where you can also see the complete shareholding I want to check, right? So if you look at the complete shareholding, you can see they have Microsoft, they have Facebook, they have Alphabet, they have Amazon. Sadly, if they had bought Nvidia, I think it would have gone up even more, but I think they don't have Nvidia here. But yeah, so they also start diversifying and investing in other countries as well. So this gives them that significant alpha. Now coming to another controversial fund, or a fund that has been doing really well in the last few months or in the last few years, is Quant Mutual Fund, right? Now Quant Mutual Fund, there's also a Quant FlexiCap fund that is there. As you can see, again, direct plan, 3,500 crore AUM, which is significantly lower than Parag Parikh, because Parag Parikh has history and it has been performing from the last few years. As you can see, the expense ratio is also higher than Parag Parikh, almost by 0.25% higher on the direct plan. Now, if you look at the all-time index ratio, look at this. So this did not perform at all till 2020, and only after 2020 it is given the alpha, which is also scary. But also you need to understand that this is a quant fund, right? A quant fund is basically a quantitative strategy momentum fund, and it usually works when the market is in the momentum. Like right now the market is in the momentum, but the minute market loses its charm and goes out of momentum and goes into a consolidation mode, usually quant funds don't do significantly well at that point. So if you look at their detailed portfolio analysis as well, they have around 4% in debt, 2% more, but they have almost 95% exposure directly into equity, which is literally like saying all in, right? So these are the companies that they have invested. Now, not necessary that they need to invest in foreign equity, like Parag Parikh has done that, but it's not necessary because it's flexi cap. If you can manage this in India, it is easier to do it. Your charges will be less and they're completely happy. As you can see, they have a mix of futures and options as well, right? So very, very interesting portfolio mix is what these two have as well. So these are the two interesting funds in flexi cap. How do you find this? You can look at go to performance tracker over here, and once you go to performance tracker, you can just click on flexi cap and just try filtering by AUM. You'll see this here. There are other ones like HDFC, Kotak, UTI, SBI, but as you can see, Parag Parikh is the one that has been doing significantly well over a 10-year return horizon as well over a long period of time. Quant is doing well only because it's doing well right now, or else Quant was not doing significantly well in the past. So that is the biggest determinant factor that you can actually look at, right? Now, what are the advantages of investing in a flexi cap fund, right? Now, one of the biggest advantages is diversification, mainly because you have the ability to invest in multiple different caps and invest in foreign companies as well. So that is one advantage that you have. Second is you can keep adapting to market situations. So the fund manager can also use good risk management strategies to find out whether investing in India is good, or investing in Europe is good, or investing in US is good, and they can always change their strategies according to that. And number 4 is active management. It is not a passively managed fund. There is an active management going on, but that also means your expense ratio will be slightly higher because of that. But what are the disadvantages? One of the biggest disadvantage is that it is an active fund, mainly because, as I said, the expense ratio kicks in. So we have to find out whether the expense ratio is high or low, and if it is high, then is it eating into my profits as well? So that is a very big problem. Now, number 2 problem is how do you time the market? Now, we might think today the market is very high and everything is at an all-time high, and it is little overheated right now. But then what if I invest right now and everything goes bad and everything starts falling down? Then I come into a big problem, right? So that timing the market doesn't work with flexi cap. So I think you should just go into a simple SIP kind of mode, because there's also very limited predictability that is there. So for all the people who are planning to invest in flexi cap funds, I would suggest keep this as an add-on. Definitely invest in your mid cap, small cap index fund. I would not do large cap and index, but do mid cap, small cap index fund, and then take some allocation into flexi cap as well. But don't over index it. Don't buy so many funds. It will definitely not work in your favor, and it makes no sense at all, right? So this was a quick video on flexi cap funds, when to invest and what is the pattern of investing. And if you want any other video on any other information topic, please let me know in the comment section below and I will make that for you. This is me, Shashank Guruppa, signing off. Take care. See you guys. Bye.